Hi, I'm Dimantha Mathew, Head of Research at First Capital Research. So today I'm going to bring you an update on the assessment of the current situation in the economy and its impact on the equity market. It's a guidance for the investors, the way forward from the current point of view. So let's straight away go into what has happened until now. So as you can see, First Capital Research has been recommending on a continuous basis to reduce exposure into equity. So from August onwards, we've seen we brought down equity exposure to 65%, September bringing it down to 50%, and then in December bringing it down as low as 25%. However, in January, we saw that as we moved to February, March, that the overall economy was going into a worst case scenario, and with that we thought it was going into further risk, and we recommended investors to basically cut down on the equity portfolio and to have only 10% equity exposure, and that means 90% cash allocation. So we've been broadly accurate there, and what we need to understand is where we are going to move forward from here. So 9,000 to 10,000 has been our target for 2022, and we've finally come below that target. And once the index comes below our equity target, we sort of look at positively on the overall equity market. And as you can see, we've targeted the index to reach around the 8,000 mark, and today we saw the index touching the 8,000 mark and some sort of recovery happening. But basically we are very positive right now about the market condition and the level of the market, and we would like to highlight some of the positives that are gradually rising. So out of all these negativity and the protest that is taking place, slowly there seems to be some amount of positivity also coming into the market. So Indrajit Kumaraswamy, our former governor, has been appointed to an advisory committee to assist in the talks with the IMF, with two other eminent personalities. In addition to that, we saw the resignation of the existing governor and an appointment of a new governor to the Central Bank of Sri Lanka is due, and both these things are can be highlighted as positive signs. A good governor coming in at this moment of time that can assist the IMF talks is a very positive thing that could happen at this moment of time. So let's see what an investor should do. So we are recommending investors to buy into stocks, and that is likely to increase exposure is our recommendation up to 25% from the 10% mark, which will, so you have to be very cautious when you're doing this, because remember, interest rates are moving up in a significant pace. So we have the monetary policy announcement also coming in and announcing potential rate hikes, and with that subsequent monetary policy announcements are also likely to have rate hikes, and that is going to be detrimental to the market. High interest rates are negative for equity returns, and therefore we have to be extremely cautious when we are buying into the market. So currently we are recommending 25 equity exposure of 25%, up from the previous 10%. And what do we put our stocks into? So let's see our top picks for the moment. TJL and MGT are the top picks, 100% dollar income companies. We love the dollar income companies at this moment of time with the significant surge in the index. Haley's have been brought back with the significant decline in price. Even we've brought in Expo Lanka, which is another company that is having over 95% exposure into dollar income. Then we have the depressed banks coming in, commercial, HNB, Sampath, NDB, all are trading less than half their book value. Like life insurance companies are extremely beneficial, are benefiting out of this interest rate rise, and we are recommending HNB Assurance, and we brought SoftLogic Life back into the picture with the significant decline in price. Then we have the power companies, LVL Energy and Windforce coming into the picture with over 50% of their income coming in dollar terms. Then finally we have Nestle and tobacco, the dividend paying companies. That's an important aspect at this moment, having dividends. So also something important to understand is the construction companies. So Access Engineering, Royal Ceramics are two key companies that are likely to benefit at this in this current environment. So Royal Ceramic is enjoying a monopolistic environment. In addition to that, Access Engineering are doing mostly donor funded projects. So basically they are positively impacted with this current situation, and we believe that you should be very cautious and carefully move into these stocks. You pick your stocks very carefully, and we would like to again highlight the cautiousness that investors should adopt, because it is important to protect your capital, and we give our recommendations very early, so that even when cutting the portfolio, we have recommended it very early, so that you have additional time to gradually exit the market. And currently we are gradually recommended to move into the market. We are moving into a IMF program, and there are negotiations taking place. Very good officials have been appointed to assist in the negotiation talks. So with that, the sentiment could change going forward, but we are only recommending 25% equity exposure at this moment of time, simply because the path is still not clear. We are not sure what is happening on the political ground. So until we have a full understanding of the conditions, we are only recommending to slowly move into the market. So that's it from us at this moment of time, and we are ready to give continuous updates as events unfold. See you soon.